if I had one trade and only one to make, just one, I'd buy gold because of the central bank's massive acquisition and its reclassification to a high liquid asset, in essence, tier one. But I also say that I believe silver is the trade of a generation, that silver is the most undervalued asset on the planet, that ultimately I don't think you can find a better investment, period, than silver. And when I talk about only if I had one trade to make, it would be gold, I would not be upset if it were silver. I just think there is a lot to be said for the fact that the central banks are buying more than at any time in history and repatriating it and reclassifying it and using it, I believe, in an ultimate drive to find some sort of honesty and transparency and stability to a new system. With that being said, there has never been, in my opinion, in my career anyway, a better time to own silver. I mean, the last time I said something like this, I said, I'll give anyone a free silver eagle if they can show me. And someone showed me, and it was on your show, that I said, what asset could be half of its 1980 high? And one of your listeners said sugar was. Now, I don't know if it is anymore, but the point is still the same. I mean, what asset can you find that is half of its 1980 high? Whatever the reason is, I can tell you that I have never seen really an investment in terms of price, in terms of historical price, in terms of its relationship geologically, or just simply its outright price relationship to gold. I have never seen something that is depleting in nature and increasing in supply, yet is decreasing in price. I have never seen something that is priced at a nearly 80-to-1 ratio, yet coming out of the ground at 7-to-1. And any way you want to slice these metrics, whatever investment you're talking about, you have an asset that is decreasing in nature, increasing in demand, is priced well below its 1980, half of its 1980 peak. There are very few things I've ever seen that offer that type of potential. Now, if we saw the ratio go from where it is now to under 40-to-1, I would tell people to trade a good amount of their silver to gold. Right, wrong, or indifferent. I'm not saying get rid of all of your silver. I'm saying that it's an opportunity that doesn't happen very often, to see this ratio in a historical context. It is rarefied air. It's happened just a very, very small percentage of the time over the last 5,000 years. So, look, the bottom line is I like them both, and you should own them both. For the last 4 years, silver has been the majority of all the sales we have done. Since March or April, there's been a lot more gold buying than we had seen the previous 3 years, because you have people literally yanking the money out of their bank accounts, seeing what's coming, and the logistics becomes an issue. So if you're spending upper 6 or 7 figures, while there's a lot to be said for silver, and you could store it in a storage facility or take possession, but $1 million in gold isn't a briefcase. It's 500 ounces, even a little less than that right now. It's 35 pounds. You could sprint to your car if you had to, but $1 million in silver is going to weigh over 2,000 pounds. So it's a problem. And so this is one of the issues that has to be confronted. So more gold than we've seen in the last several years, but still silver is by far the leading component of every transaction we do, or of a cumulative look at all of our transactions. It's by far still the largest component of our sales, because it's impossible to ignore the value that you see there. For me, I would be more heavily silver, with the idea of hopefully switching to gold at some point, some of it, not all of it, when the ratio changes. But if you just want to go silver, I have no problem with that. It is as compelling as anything I've ever seen in terms of its story. To me, I look at a big picture. The big picture to me is that I think that we are heading down a pathway to some sort of a default. It maybe won't be an explicit default. It'll just be an inflationary default. I think we're heading into a period of time, or to a place where foreigners aren't going to buy our bonds. They don't want to. They're going to stay away from them and choose other things like gold and silver. That means the Fed will be the issuer, or the purchaser rather, of last resort. I think we'll see higher inflation. I think that what the Fed is, the jawboning that they do is nothing substantive. Yeah, they'll probably pause right now. They're not going to pivot. They're probably not going to raise. Whatever they do, it's meaningless. As far as I'm concerned, I think you're going to see a very difficult time in the Treasury market. I really do. I think we haven't even begun to see the problems yet. So whatever the Fed is saying, really, it's just noise to me. One of the things I find most annoying is how the markets are so reactionary after Powell speaks. Look, let's just make it simple. The trajectory we are going on, a $400,000 mortgage 2 years ago at 2.75% was $1,600 a month. That same $400,000 mortgage now at over 8% is $3,000 a month. That's an 85 or 88% increase in 2 years, and we're not slowing down this trajectory. And I don't think what Powell will say will mean anything. They haven't been honest about anything they've told us to date. Why believe it now? Don't listen to the noise. Look at the big picture. And the big picture to me is something that is much bigger than the Fed. I think the markets are much bigger than the Fed. And I think they're starting to realize that, as we are seeing a lot of countries around the world just shed treasuries. And this is a problem where we continue to go deeper and deeper and deeper into debt. At some point, how high does the yield have to really go to attract more buyers of our debt? I don't know, but a lot higher than we'll find out. I think it's the first time in 45 years that we've seen that the Treasury market has greater volatility than the price of gold. Why the central banks accumulating as much as they have certainly doesn't hurt the gold price whatsoever. So yeah, I think this is a shift where we will see people question the wisdom of holding debt issued by the largest debtor in the world as rates continue to rise. I think that's what's happening. So yeah, I think it certainly put a little bit of wind behind the sails of gold, only making silver look that much more attractive as far as I'm concerned. I think it's a real opportunity to play the gold silver ratio. But with everything being said, to me, it is the most undervalued asset on the planet, and the play of a generation, the trade of a decade. And if the worst case thing happens, you're stuck with silver, so what? There are guys like Bix who will tell you that it will go 1-to-1, maybe even silver being worth more than gold. That's what he believes. But if it went to 7-to-1, would it be that far off of reality? I mean, I know it's not there and maybe never will get there. Maybe it will. That's what it's coming out of the ground at, according to Keith Neumeier. If it's coming out of the ground at 7-to-1, then take $2,000 and divide 2,000 by 7. And what do you get? You get $285 an ounce. Is it that outrageous to say that? I don't believe it is.